This is your LMAX Exchange technical update for Friday, August 25th, 2017. Euro dollar. So the euro is caught in consolidation right now, with the market unsure whether it wants to push higher in a break of a bullish consolidation up above 119.11, which is the current 2017 high. It's also a plus 2.5 year high. A break above there would open the door for a move up towards the next extension, targeting the 121 to 121.50 area. Or is the market consolidating now ahead of a deeper correction to the downside, with a break back below the 117 handle to accelerate declines towards the 115 area, certainly towards that 115.50 area 50-day moving average. Right now, key levels to watch above and below on a very short-term basis are a recent high that we saw at 18.29, which comes in on the 21st of August, and then the low we want to pay attention to is that low from that same day on the 21st of August, which is around 17.31. A break on either side will perhaps give a little bit of clarity, but again, right now the market isn't sure which way it wants to break, and caution is required. Sterling dollar. So cable has finally come down to retest a critical previous resistance, now turned support at 127.75. Remember, that was the breakout area where we broke above that range high that had been capping gains off the plus 30-year low from October of 2016. And so the breakout did suggest that the market was seeing a bullish structural shift and a longer term base now potentially in play. And so while we've come back down to this 127.75 area, the overall structure is now constructive, and the market should be looking for a higher low ahead of a continuation of gains up above the recent 2017 high and towards that next key extension at 135 further up. Dollar yen. So dollar yen is consolidating off recent lows. This is a market that's been range trading roughly between the 114 to 115 area and 108 down below. So this latest decline that we have seen is still possibly not done yet, with the market potentially accelerating down towards a retest of that 2017 low from April, which comes in just ahead of 108. At the same time, if the market is able to break back above 111, this would suggest that the pressure is finally off the downside, opening the door for a resumption of this range trade up towards the 114 to 115 area. So it will be interesting to see how things play out here over the coming sessions, but right now the pressure is still on the downside despite Thursday's bullish price action, and there still is risk for a retest of that 2017 low at 108.13. Euro Swiss. Euro Swiss hasn't been doing much over the past several sessions, but this market certainly has done a lot over the past several days, breaking up above key resistance initially at 110 and then some significant resistance at 112, eventually leading to the highest levels since January of 2015, when we saw that collapse in Euro Swiss, the market trading up to as high as 1540 about. And so this consolidation that we're seeing now could still see additional setbacks, but setbacks are viewed as corrective, with the market now seen supported into the 112 area ahead of an eventual push beyond that 115.40 area high and towards 120 further up. Aussie dollar. So Aussie dollar has been showing signs of putting in a lower top now below the recent 2017 and plus 2 year high at 80.66. This will be confirmed on a break back below the low from the 15th of August, which comes in at 78.08, and that break would open a fresh downside extension into the 76 area. Dollar CAD. So dollar CAD has been under some intense pressure over the past several months. The market had seen a bit of a correction out from plus 2 year lows at 124.14 ahead of this latest minor pullback that we're seeing. But at this point, the question is if dollar CAD is going to continue this downtrend for fresh lows below 24.14, or if the market is still in the process of correcting higher and we're just looking for this higher low that should carve out at any moment ahead of a continuation of the correction back above 127.80 and towards 130 further up. So Friday's price action will be interesting to watch. The market, if it breaks back above the high that we had seen on Wednesday, which comes in just shy of 126, so if we break back above 126, that will be a bullish signal and open the door for a more significant correction that could lead to 130. So that's going to be the key level to watch above. Below 125 area is a pretty solid psychological support zone. We'll see if the market can establish a close basis above that level. If it closes below, it will invite an immediate retest of those 2017 lows that were seen back in late July, just ahead of 124. Kiwi dollar. So the New Zealand dollar has recently broken down below some support in the 72 area. This sets the stage for deeper setbacks, which ultimately could open the door for a retest of the 2017 low down in the lower 68 area. Any rallies here should be very well capped from here, with only a break back above the 73 handle to really compromise or take the immediate pressure off the downside. SPX 500. The S&P 500 has been trading up to record highs this year, continuing this uptrend that we've seen over the past several years. But in recent days, we are seeing the potential for some form of a shift. We've seen a recent rally stall out ahead of the record high, followed by a breakdown to fresh multi-day lows, and now this latest rally. And if we stall out again here and put in a fresh low below the recent low at 24.17, this could set the stage for a breakdown below critical support at 2400. If the market establishes below that level, then the conversation will really shift and will suggest that the market is putting in a more significant bearish structural formation, opening the door for significant downside over the coming days, weeks, and maybe even months. Gold. So gold has been consolidating recent gains, but the market has broken out above the 2017 high, the previous 2017 high the other week, and this sets the stage for a move up towards 1375, which is the 2016 high. At this point, any setback should ideally be very well supported ahead of 1240, though only back below 1200 would compromise the constructive outlook for gold.